Hello and welcome back to Bunnex Investment Group. This is going to be part 3 of our free version Orderblocks course. So before we start, please check out our free Telegram channel. The link is right in the description box below. So in this video, we are going to talk about a simplified 4-hour trading strategy utilizing Orderblocks. And we'll also talk on how to select the best order blocks, since there may be a lot of them on the charts. So this is a process of refining the best order blocks within your trading. So the first thing that you need to see is break of market structure. As we defined earlier, we said to dim a market that it has broken structure, we need to see it doing this process. So in this case, we are in an upward market structure where we have higher highs, higher lows, higher highs, higher lows. And then for us to say the market has broken structure, we need to see it breaking the last lower high like this. So in this case, we would say after breaking the last lower high, we expect to see the market giving us this is a higher low. We are expecting it to give us a lower high in this area, but in this case we now have two order blocks, which are 1 and 2. So to know which one to respect, since we now have order block 1, order block 2, in this case, the question becomes, which one am I going to respect, this or this one? So to know the exact order block we are going to respect, we will now need to incorporate indicators. The indicators that we are going to use are exponential moving average 50 and exponential moving average 13. All we need to do is to see crossover of these moving averages within the breaking of structure process. Therefore, within this flow, we need to see the market actually giving us a crossover of the 50 and the 13 EMA. After having that crossover, we would expect to see the market come back and retest the order block above the 50 EMA. Therefore, to just have a summary of what I've just said, the first thing is to see breaking of structure, then within that breaking of structure, we need to see crossover of the 50 and the 13 EMA. 2, then 3, we need to see the market come back, and the order block to pick will be the one above the 50. Actually, the first order block above the 50 EMA is the one that we expect to see the market bounce from. So in this case, we had this order block and this one. Therefore, if this one was the first one above the 50, is the one that we were going to pick. So to have a full understanding of this concept, let's jump over the charts and see how it goes. So this is USD against CHF, and on USD against CHF, the first thing was to see the market breaking structure. So we had higher high, lower high, and lower low. In this case, we broke the last higher high with this impulsive rise. And mind you, this is H4 time frame. And after breaking this last higher high, we can deem that the structure of the market has been broken. And in doing so, within this impulsive move, we can see that we had a crossover of the 50 and the 13 EMA. In my context, the 13 is the one in red, the 50 in blue. So after having this, we now expected to see the market pulling back to the order block below the first order block, below the 50 EMA in this case. So we would mark that order block. In this case, we can see that the first order block below the 50 was actually derived from this one. This was the last red candle in this movement going downwards. So, as defined on how to draw order blocks in the other parts of this series, we said you mark the body of the candlestick, and then protrude it in the future to see the reaction of the market after it reaches that point. In this case, we had pins to the same region. Therefore, any buy after closure of these candlesticks, green candlesticks, was going to be a valid entry within the market. However, as always within the forex market, you would need a lot of patience for you to see the market play out the way you expect it to be. This case, we had the market flow up to this point. The next thing was now to see the market breaking structure again. In this case, the market was making higher highs and higher lows, and after that, we can see that at this point it broke the last lower low, the lower high, of this upward trend. And within doing so, that is where we had a 50-13 EMA crossover. Therefore, the next point of entry was going to be a point that is above, or an order block above, the 50 EMA. Therefore, this was the last floor, and within the last floor, the last red candlestick was this one. Let's mark it. So marking this order block would actually give us an entry after the market pinned to the order block at this point, and the market went our way. Then after that, we can see that the market now broke structure at this point. After breaking of structure, we were expecting to see the market come back to the order block below the 50 EMA. In this case, the order block that we're going to derive was this last green candle. In this case, last green candle in this small upward move. So this is the point where we were expecting to see the market come back to retest like this and continue upwards. So in this case, we were not issued any opportunity, and then after that we can see that the market right now, this is current market, and it's actually the last days of November, and in the last days of any month you should always be careful when you are making your entries, because they will be trapping and creating liquidity for the following month. In this case, we can see that there was break of structure since this point was actually broken, and what we are expecting is to see the market come back or retrace to the order block above the 50 EMA. In this case, the order block is this one. This is the order block. We are expecting to see the market come back and continue with its downward trend. So basically, in summary, what you'll be looking for is break of structure. After break of structure, there should be a corresponding 1350 EMA crossover. After that corresponding 1350 EMA crossover, we expect to see the market retrace back to below or above the 50 EMA to the first order block in that region, and you'd expect to see the market reversing from that point. So So that's basically a very simplified strategy, and as always, I always advise that you need to backtest before you engage into strategies with real money. Otherwise, you may see that you are not it's not your style of trading. But this one is a very simplified form of refining order blocks. On that note, we come to the end of this video, and please check out our free Telegram channel. The link is right in the description box below.